Hey guys, so welcome. We're going to get started on the introduction of part one, or one of the strategies. There's two strategies, but we're going to look at just one for now. We're just going to kind of keep this as short and as sweet as possible to try to get it resonating with you guys. This one is going to be looking at a daily candle, so we're looking at the prior day candle, and then we're looking at areas, coves within that day, to then look for opportunities in the current day as it develops the trade. So we're going to start off looking at this day here. This is August 6th. We're looking at this one because we can clearly see in foresight that the next day trades within it. So we know I can give you some examples as opposed to this one. Not so much. This one, yeah, but we'll do these uh, as we progress. But we're just going to start with this one day. We're going to ease our way into this. So this is the order flow volume profile that I have on the screen. That's what this area is. This shows us volume at price. So the idea with this is we are looking at coves because I like fishing in coves. So we're looking for volume coves where there's less volume, clearly less volume in other areas surrounded by areas with volume. So there's one there, and let's change this color here so that we can try to make it easier to see. I think maybe red will stick out pretty well. Yeah, red sticks out well. So there's one there. Oops. Control copy. It's not an exact area, but we want price to sweep this area before we look for a setup. You can see one up here, and there's purple here. This is the value area high, value area low. This value area low also has a cove, as does the volume area high. And you can see one kind of right in here as well. So we got 4 on here. This is a great start. 4 is a good number. Now what we're going to do, we have these picked. This is all we have to do. We're now going to go to the 8-7 1-minute chart. So let's duplicate this. Let's turn that off. Let's go down to 08-07 2024. We're going to go to the 1-minute chart. And we are going to fatten these candles up a bit. We're going to go to 6:30 since that's when trading starts for me. I'm in Arizona, so New York session right now as of August 10th starts at 6:30 my time. All right. So what we're looking for is we're waiting for price to come down and basically test these areas. If we're coming down from above, we're going to look to long here, at here. If we're coming from below, we're going to look at shorting if the opportunity arises. Now we want to trade touch and go scenarios. So if price touches this line and gives us a signal, we want to go. We don't want price to just flirt with the line and then go. It has to touch it and give us a signal, or if it flirts, it then needs to make a new low and then give us a signal. It can't just sit there and go. It has to touch and go, or flirt, make a new low, and then go. Same for going short. So you can see price comes down here. We also need volume by the time interval, which is 1 minute. So we need volume up, down here. And this is our main indication of being a signal to enter, okay? So what we're looking for is we're looking for price to touch this line, and then we're looking for a green candle that's an outside candle, meaning it closes outside of the previous candle, or it closes inside the previous candle, but it has more volume. So here we want to touch and go, price comes down. Once this happens, our next candle has to be green with volume or close beyond here with volume. It's neither of those, so this is no good. To have a signal here, we would then need price to sweep this low and then again immediately give us a signal. Doesn't happen, not a big deal. Price comes down, tests this area. Am I on the right day? Yes. Price touches this area. Again, if this candle has more volume than the prior candle and is an inside candle, we'll take it. Or if it has more volume or less volume, but it closes beyond here, we would take it. It doesn't. So now we come back up. We're now looking to short the market here. We're back up to this line coming from below. We're looking to short here. Now it's not as simple as just getting the signal and going. We also have to look for snags because remember we're relating this to fishing. So we're in the cove. We're looking for something to fish with structure, right? Maybe it's lily pads, maybe there's a tree halfway submerged in the water, maybe it's a outcrop of rocks. There's some type of structure. Now, if the fish is under a tree and we can see it and we're targeting that fish, if we cast that fish and it grabs the lure, before we have time to react, that fish could swim into that tree in the branches and tangle your line up. And now you're not catching the fish, you're losing your lure, you're losing some line, you're stressing your reel out, you're stressing your rod out, and that line will break. That fish may be caught on the lure still and be tangled up in the tree. So we don't want to risk that. There's too much risk there. Now, however, if the fish is further away from that structure, by time we hook up with the fish, we can then try to finagle it from the structure. So like if let's see, say this is a fish and there's a log right here and this is you fishing. If you cast to that fish, by time you hook up, you can then try reeling it and pulling it away from it getting caught up on the structure. Now, if the structure's right here, you don't really have time for that. So it's not worth the risk. So what I'm getting at is we have to watch for snags. What a snag for me is a W or M breakout. It's the midpoint. So this is a W breakout right here, where the price breaks above this midpoint of the W. So because we are closing right before that snag, we don't want to trade into that. We want to look for either a close below it or a trade further away from it that fits all the other criteria, but it gives us time to fight that fish out of there before it has a chance to, go into the rocks, go into the tree, tangle up in the lily pads. We want time. We don't want to basically be going into that trade and having the price immediately come against us, hitting our stop. So here we have volume and it's an outside candle, but again, we don't have enough time to fight this fish before it could break us off or get tangled up. However, you can see price rejects off there, comes back up, we make a new high. So again, touch and go. The original touch and go was here, but it's giving us another opportunity with a new high to touch and go from a further point. This candle is an inside candle, but you can see it has enormous volume compared to the prior candle, being this green one. So this is a touch and go. We're avoiding snags because we have all of this distance here that allows price to come back towards our entry and not immediately towards our stop. So you need room to fight the fish. You need room for price to resist against your direction without immediately going towards your stop. This gives you plenty of room. So we take this setup right here. I always go 5 ticks beyond the candle for my stop. So 76 is going to be 81. And you can see that our target is just beyond that structure, the snag, so to speak, the log in the water, the rocks, which means as price comes down to it, it may resist it, which it clearly does, but it only brings it back to our entry. Our entry can then fight. The sellers can then sell off some more, and the sellers can outdo the buyers here. Whereas if we entered here, you can see it's right in our face. It can push the price back up, which it did, and we would have lost if we entered too soon on this one. So when the conditions are right, the snags aren't right in our face, we can enter touch and go. So I'm looking literally at notepads, at notes, sticky notes. I don't know why I'm having a hard time with this. Post-it notes, stick-it notes, same thing, I guess, under my screen, right, to remind me because it's hard to remember all the rules sometimes, and it's easy to forget one or two if they haven't occurred recently. So I watch for sweeps. We got a sweep here at the volume cove from yesterday, which we identified. We only want to trade touch and goes. So this was the first touch and go, but then since we made a new high and it's giving us a go, we can enter. We're looking for an outside bar without volume, or they can have volume if it's an outside bar. Basically, outside bars are always a go. Or if we have an inside candle with volume, we can take it as well. And again, that's right here. So again, we go 5 beyond. So 78 plus 5, it was different before. I really got to zoom in to get it exact. Yeah, see, so 77 would be 82. Could have sworn it was 81 just a second ago, but whatever. Now on top of that, what I do is I highlight the candle, and then I'm going to take my volume profile tool and highlight all price action within the day that has been within this candle, and I look for the most immediate volume spike from the close. So you can see the most volume spike is right here, which within this range is the point of control, meaning the most volume. So I then adjust my entry by a little bit here. I shave off about seven ticks of risk, and it gives me a little bit of better entry with less drawdown. So that would have been a great trade right there. Awesome. Now we can keep using this line throughout the day if we get the right conditions. So if price came back up to it, it wouldn't need to sweep this high. It would just need to be a new touch and go situation. Because as you can see, it didn't sweep the high over here, but we broke below. We gave it room to breathe. The sellers that were here previously may be moving their limit orders up closer. And so we're considering this a new opportunity here. We don't have to match this, all right? Price comes down. We're looking for longs here. We're looking for an outside bar close or an inside bar close with volume that makes a low here. This one does not have more volume, and it's an inside bar, and it's an ugly candle anyway, so I wouldn't trade that. Now price comes down here. If we're looking for snags, our M breakout, because it's an M now because we're coming from below, would be right here. So our snag is pretty far away. I'm looking at the most recent one. I'm not looking at this one. I'm not looking at this one. I'm looking at the most recent price action. So I don't have to worry about that. Now you can see here, again, we have more volume than the prior bar, and it made a new low. It swept a low at this volume cove. This was the low. It didn't give us a signal. We then made a new low. We have a new touch and go situation here with a proper signal. So 68 and 5 is going to be 73. We're going to again take our volume profile tool and make sure we can't get a better entry. We can get a better entry. You can see volume sticks out right here. So we shaved off a little bit of risk there, really reduced our drawdown. And when price does fill it, it immediately shoots up and hits our target. Great trade right there. So again, imagine we're fishing. Imagine you identified this cove on the lake, in the lake, pond, whatever it is. Okay, that irrelevant. I'm getting sidetracked. Imagine you identify this cove. We identified this cove on the daily chart on the prior day. When you finally come up to fish this area, you're looking for structure that you can get snagged on or that you can use for your advantage. Typically, we're looking for structure that we could get snagged on. We don't want to get snagged and risk our lure, our line, our reel, and our rod breaking or getting worn out by getting snagged on these things. Here, we don't have any snags. We don't have any structure to worry about trading into. So we identify this cove. We see an area where we think there a fish could be. When we finally feel that strike on the line, we feel that fish grab that line, we set the hook. In this case, the strike is the volume or an outside bar close. I just like to try to keep it as simple as possible, relating it to something that I know a lot about. I'm narrating in my head. I'm imagining that this is literally a fish. My lure's coming across, the fish sees it, it jumps out to it, strikes the lure, and we're good to go. Beautiful. Price comes down to the line. This other volume cove here breaks through it. Okay. Now we're looking for a short when the price comes back up to it because we're now approaching it from the bottom. We have an outside close here. Outside candle close here relative to this one. We just swept the high. Well, I guess we set up the high, and then we immediately get our signal to the short side. So this is an opportunity to trade here. Let's take our tool, our volume profile, and see if there's an area of within the confines of the candle range where volume jumps out. And if I bring to front, you can see, I'm going to move this a little bit. You can see right here, this one definitely sticks out a lot. So we'd go there. We'd go 59 and 5 is going to be 64. And you can see we get filled minimal drawdown and straight to target. And my target right now is 1.5R. We're risking, for every dollar we risk, we're trying to get $1.50 back. I don't like to stay in trades very long. It's just how I am mentally right now. I like to get in a trade and out of a trade as soon as possible. Now we're looking for snags, right? Before we enter this trade, we're looking for snags. This one doesn't really have a snag. This was more of just like a V bottom. Oops, that's not the right tool. This is more of a V bottom. It just comes down and goes up. So there's really no snags that we have to worry about. This is not a snag that I'm concerned about because it wasn't an obvious M or W setup. So when price immediately goes below and comes back, I typically like to give it room to breathe. I don't want it just immediately because this isn't an exact area, right? It's a broad area. The line is representing the biggest pullback within that. So I'd want the price to move away, like we did here, right? There was no setup here. Price breaks away and then it comes back to it. Right here, it's a little different where price comes to it and then it doesn't really give you a great setup. I'm sorry, price leaves but doesn't get far enough away to really know we left the low volume area and it comes back. So now price comes back down here. We're looking for an opportunity. We get a signal here. We touch the area. We get a inside close, but we have volume, so we can take that. And this is what 18, 121, 75, 18, 70, 121, 75 right here. So we can see that this one is actually going to lose. That's okay. This strategy you do lose. I'm not going to lie about that. Some people try to make their strategy out to be invincible. Um, I do try to make it as best as I can, but it's inevitable. You're going to get some losses, and you just have to accept that. So one thing I will note with this trade is that when the volume spike, there is a little tiny one up here, but when you have the major one this far down below, that's typically a sign that you're not going to get this trade. You really want the biggest spike to be right towards the top of it. You want it to be obvious. You want it to be towards the upper 75% of the candle. Not a big deal, okay? If you take this and you lose, whatever. 80, 87, and 5 would be 90, what, 92? 3, yeah, 92. And our entry would be all the way down here because this is where the biggest spike is relative to the close. Maybe it would have been up here. So 92, okay. I will say, if you've already won one trade for the day, you don't have to keep trading. And if you are going to keep trading and you use prop firms like I do, switch to another account so that you're protecting this profit, right? So if you take this trade and you win, excellent. Switch to account number 2 if you have one. If you don't have account number 2, maybe don't trade anymore for the day, just step away. So here you then trade on account 2. If you have account 3, you would trade on 3, or you'd go back to account 1. Now here you might be on account 4 if you have a fourth account, or you might be back to account 2. So, you win on 1, you win on number 2, you win back on 1, and then you lose on number 2. So you lost 92 and you won 87, so you're down for a little bit on account number 2. Just different ways of doing it. So let's see, price comes back up. We get an outside close here. We have this volume sweep, and then we have a volume sweep. We then immediately have an outside close here. So this is an opportunity. Now, if we look to our left for immediate snags, our immediate snag would probably be right here. And it's far enough away. We do have one here. And we definitely have one here. So I'm always looking at the most immediate one here because you can see price just blew through this one and even this one as well. But since this is the most recent one, this is the one that I'm really concerned about. So price comes down. It's an outside close, doesn't have volume. So outside close is good enough for an entry. We're going to take our volume profile, run it across so that we can see where our entry would be. Within the confines here, let's make this so we can identify maybe where it jets out the closest amount. Probably here. Here we definitely have it. But again, we're looking for the closest one to our close. So it would be about there. Got about 89, so 94. And ooh, that was very close. You can see we hover here for a little bit, consolidate, and then we jump out and tag our profit just barely. Again, you don't have to keep trading. If you started the day off winning one or two, call it there. If you win at three, consider yourself lucky. If you're taking your fourth trade, okay. If you're taking your fifth trade, okay. You know, I get it. I get it. I really do. That's all I'll say. And then we're done at the point at the end of that. So I'm going to stop this here. Just to kind of quickly recap, we're waiting for sweeps of these volume coves from the prior day. We're looking for touch and go situations, which are when it touches the price, it then immediately gives us a signal, meaning it touches the price and then we get our signal. Touches our price, or touches the cove, makes the low, gives us a signal. Touches the price, gives us a high, gives us a signal. We also have to take into account structure or snags that we can have from the market, and also just like in fishing, we don't want to hook up a fish that's in a tree, because as soon as we hook it up, it's going to get tangled up in all those branches, and we're going to lose our line, we're going to lose our lure, we're going to stress our rod and reel out, and the fish may get all tangled up in that line and be stuck there because you took a risk you shouldn't have taken. And to translate that into the market, you're immediately going into an area that could now be working as support in this case, and immediately push it into your stop. If you have area to fight the fish before their structure, take it. If there's area before you come into that support where it won't push it immediately into your stop loss, take it. All right. And our signal is the sweep, the new high or low, depending what way we're coming from, and an inside candle with volume or an outside candle with or without volume. So that's strategy one, using the prior day volume cove, also known as low volume node.